Welcome back everyone to the Audacious Money Witch channel, where we talk about investing and trading and a lot of fun things. I just tried FSD V12. Tesla stock is ready. Tesla will be the most efficient AI company on the planet, with the power of Google and AWS combined. By now you probably know that I am a Tesla shareholder that believes the FSD robotaxi network is the future. I also believe the next generation Model 2, a low-cost vehicle, is coming with robotaxi network built in. I recently did a buy shares at around 140s before the earnings, because I saw GM reported a 21% year-over-year increase in retail deliveries for its EVs, and General Motors stock rose 4.6% after GM reported better than expected first quarter earnings, increased its profit outlook for the full year ahead, and said the cost of batteries for its EV has dropped. Then I thought, if GM had a nice pop, Tesla is going to kill it. So I bought more Tesla shares on Tuesday morning. After the market closed, I was so shocked to see Tesla stock jump 10%. I was prepared either direction. Actually, I am okay if Tesla stock is pushed down to 100. That just means we all get a bigger opportunity to buy more cheap shares. Why am I okay with it and not worried at all? Because I have tried FSD V12. Here is me in a Tesla Model Y. I also test drove a Tesla Model S full self-driving. It's working. Robotaxi is coming. In Q1 conference call, Elon said Tesla has updated their future vehicle lineup to accelerate the launch from late 2025 to early 2025, possibly late 2024 this year. Elon said if you haven't tried FSD V12, he strongly urges you to try it out. It's profound. Even if you don't own a Tesla, I don't own one. You just go to the Tesla service center to book a test drive and try it out. It's easy and it's free. It's become clear that the vision-based self-driving approach with end-to-end neural networks is the right solution for scale autonomy. Our entire road network is designed for biological neural nets and eyes. So naturally, cameras, digital neural nets, are the solution to our current road system. As Elon announced, Tesla will showcase the purpose-built Cybercab or robotaxi on August 8th. For AI computing, he is talking about the AI chips. Elon said over the past few months, they are expanding Tesla's core AI infrastructure. For a while, Tesla was training constrained in their progress. At present, Tesla is no longer training restrained, meaning Tesla was able to buy enough M1300 GPUs from AMD or NVIDIA's H100 GPUs, so Tesla has been making rapid progress. Tesla has installed and worked with 35,000 NVIDIA's Hopper H100 GPUs. Tesla is going to have 85,000 GPUs by the end of this year, just for training. They are using these NVIDIA Hopper AI chips as efficiently as possible. We know a Hopper costs about as much as a Model Y base, which is roughly $30,000 a piece. That means Tesla is spending $2.5 billion just on AI GPU chips. Now, how can anyone say Tesla is just an automaker when Tesla is spending $2.5 billion just to buy AI chips to train their AI? Tesla believes scaled autonomy is only possible with data from millions of vehicles and an immense AI training cluster. That's why they need those GPUs. We as investors don't have much wait time left. We are really heading for an EV autonomous future, Elon said. Now let's get into the numbers with the CFO. Total automotive revenues down 13% year over year. Not good. Just as I said, we already have a revenue decline. Energy grew 7% and service grew 25%, very nicely. But the total revenue still declined 9% compared to last year. Gross margin is down to 17.4%. Profit margin is down to 5.5%. Net income down to making 1.1 billion in Q1 this year from last year of making 2.5 billion. Free cash flow is down $2.5 billion. Tesla said it's because they spend $1 billion on those 85,000 AI GPUs. They call it AI infrastructure CapEx. Also, inventory increased by 2.7 billion. Tesla's cash balance was down to $26.8 billion from last quarter's $29 billion. I think this just shows just how fast even Tesla is buying those AI GPUs. Production is down 2%, delivery is down 9%. Which shows this Red Sea conflict, macro headwind, is affecting Tesla a lot. We have Model 3 and Y inventory up. We have 28 days of supply, up from 15 days this time last year, which shows signs of weak marketing strategy and advertising weakness. It also shows signs of a weak economy. We are probably in a recession already.
You wrecked your Tesla. You're not wrecking mine.
Come on, that caps me at 70 miles per hour and limits performance to 80 kilowatts. Come on, you have to let me do ludicrous mode. Now!
I want 2 more months of payments.
1 more month.
Fine. Do not crash.
Here we go. 3, 2, 1.
One thing I have to address to potential investor or shareholders is this graph. You can see Tesla is starting to lose market shares just in this quarter in the US and Canada, very obviously. This is why I will talk about General Motors shortly, because I think they are stealing some market shares here from good old Tesla, my Esla. For simple 2 reasons. First, they have a lot more experience in advertising and they have more brand new lineups. So I think it's important to look at General Motors' progress. We all know Tesla has BYD as a Chinese competitor, but in the US, the competition is far behind. My question is, why is GM's share price far outperforming the market? What have they done that is pleasing Wall Street so much? In a letter to shareholders, CEO Mary Barra said GM is seeing good early sales momentum for EVs such as Cadillac, Lyric, as it benefits from scale, material cost, and mix improvements. GM is benefiting from lower EV costs. GM has standout EVs today and more coming. GM said it is on track to produce 200,000 to 300,000 EVs in North America this year, which would represent a more than 10-fold increase from last year. Improving module availability is enabling higher vehicle production, which Mary believes will help GM win even more new customers in the growing US EV market. GM competes with Tesla on price with Chevrolet Equinox EV, which the car maker describes as the most affordable EV with more than 300 miles of range. The GM team is leaning into every opportunity with a focus on profitability to build on their strong start to 2024. That's why GM is raising full year earnings, earnings per share, and free cash flow guidance. GM has an unbelievable Corvette ZR1 coming that sings. You know who else likes a V8 engine that sings? Wall Street. GM's total revenue came in at $43.01 billion, beating Wall Street's estimate of $41.09 billion, growing 8% year on year. GM's earnings per share of $2.62 easily beat analysts' forecasts of $2.13. Prior to Tuesday, GM stock was up by 20.3% in 2024 compared to a 5.1% rise by the S&P 500 and 43% fall of Tesla stock. Tesla is still by far the world's most valuable automaker.
Been here before, haven't we? That's now at its highest in 2.5 years. And then today we saw the stock going up more than 12% after hours. Do you feel like the scene is set here for another big battle between the shorts and the true believers of Tesla?
This company is going to flourish, or this company is just going to be yet another automaker. And it is a very similar setup to what was going on in 2016, 2017 when they were trying to break through with Model 3 production. So this is not a bet the company on autonomy and the robo-taxi, but I would describe this as them being all in on that. And so to put it on the most basic level is that this comes down to, for investors, almost a religious question. Do you believe that the future is autonomous? If you think that electrification and autonomy is the future, Tesla by far is in the best position to capitalize on that.
More importantly, investors are worried that Tesla has a tech growth company valuation, but no engine for near-term growth. For Optimus humanoid robot, it can do useful things in a lab by itself. Elon said Optimus will be more valuable than everything else combined. Tesla is best positioned of any humanoid robot maker to be able to reach volume production with efficient inference on the robot itself. Elon Musk just said Tesla's AI inference efficiency is vastly better than any other company. No company can come close to the efficiency of Tesla. For the pathway toward regulatory approval for unsupervised FSD in the US, this question sounds exactly like the legalization of cannabis. We know it will happen, just don't know when. Tesla will be like a combination of Airbnb and Uber. Tesla will own and operate a fleet of cyber cabs, and the Tesla car owners have the option to add their personal car into Tesla's cyber cab fleet. With tens of millions of fleet globally collecting data like Google Search Flywheel, and because each car there is a kilowatt of computer chip hardware and hard drive inside each Tesla model. When the Tesla is not driving itself, when they're just parked, hundreds millions of Teslas worldwide will be connected online, which will form an AWS cloud network, which will be 100 gigawatts of inference compute power ready to use to solve something else.
Be careful, Charlotte.
What encryption does Tesla use?
Curve 25519. The most secure discrete log parameter there is.
Elon just said Tesla's full year revenue this year is going to be higher than last year. Let's talk about 10% layoffs that have been happening. The CFO said it will save Tesla over $1 billion in 1 year. Elon said about every 5 years we need to reorganize and streamline the company for the next phase of growth. Elon said this on X, not quite betting the company, but going balls to the wall for autonomy is a blindingly obvious move. Everything else is like variations on a horse carriage, so it's pretty clear that this is the way that Tesla is moving forward. Tesla's now making it crystal clear that they are moving away from being a car company to being an AI company that solves autonomy. They are clearly very confident in the progress of FSD Robotaxi and Optimus. I think this transformation between people driving cars and autonomous vehicles will absolutely happen. Elon said if you don't believe in FSD, you shouldn't be in Tesla stock.